But it's not just the threat of a fiery self-immolation that fancy new Chinese EVs pose. No, there are increasingly more threats and hazards posed by even the poshest and most expensive brands and models. What I'm about to show you will have you on the edge of your seat.
Thanks once again for joining us. We value your time. Our focus today is the fact that Tesla came out with production numbers last week. We're still a couple of weeks away from earnings, but we do have the 10th event coming up. And I wanted to introduce a discussion about production numbers and where the stock is heading based on sort of research and some careful observation. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is a repeat visitor, welcome back. If you're new to the channel, welcome. We also want to ask you to join on Patreon if you enjoy the show, would like some better ideas on investing and trading. So after the numbers came out on production, I looked at the numbers, 462,000, and my initial reaction was, that's actually pretty good. That's a rise in the number of units compared to the previous quarter, and things seem to be going pretty well for Tesla. Now, the problem with what I just said is that there are two answers to that sort of question. The first answer is, wait a second, the stock actually fell $15 from like 260 to about 245 once those numbers were revealed. So how can things be going pretty good if the stock price is falling? Great question. The answer is that there's a whisper number of about 470,000, maybe even higher, that wasn't achieved by Tesla. So therefore we saw a lower price on the stock as a result. Now, given that this dipped and given that these folks know what long-term and short-term investing is all about, and therefore they chose the short-term sort of dip in the stock price at this point, what does this kind of mean? And I have to say that I really struggle whenever numbers come out from Tesla, especially if we don't have the backup. And there are multiple reasons. The first reason is that anytime you see information coming out, there are a lot of really smart people that go through that information to determine how to react to it. The challenge is that there are certain people called longs or institutional investors, and there are certain people called shorts. And their inclination is, how can I make as much money as I can in as short a period as I can? And then we see the byproduct of that. Now, after I saw the number, I was like, wow, those are pretty good numbers, but they're not hugely impressive, so therefore the stock price will give back in the process. So that's my overall sense of where we are with this number. The other thing that's going on is that I often talk about an ancient Indian proverb of the fact that there are large numbers of different groups of folks who are investing, and each of them, the investors and the analysts, have a different perspective on how the elephant looks depending on which part they're holding. So one of the things that I've been laser focused on and wanted to encourage you to join me in the process is the clip that I put on for Sarpenza to open is a really interesting former sort of Chinese resident for 17 years who has a show all about what's going on in China. So there's this huge global debate going on between Tesla and China. So China helped Tesla get going, but a lot of the core idea of helping the Tesla become fairly large in Shanghai was designed to find a way to make it easier for domestic manufacturers to sort of copy what Tesla was doing and incorporate those innovations in their production process. So as a result, a lot of Chinese manufacturers right now are doing very well, particularly in markets like Europe, Australia, etc. And so one of the questions that lurked about this whole, what was going to happen with Tesla's earnings, etc., was how are the Chinese growth in sales, particularly in Europe, going to impact Tesla's ability to sell cars? And the answer that sort of came up is that um, it's having some impact, very, very truly, but the impact isn't as great as you would think. And so, as you'll notice, if you rewatch some of the vehicle fires, et cetera, that are going on, we're in kind of a transition period right now. The Chinese have introduced a lot of new vehicles. There's been a process going on where there's been suppression of some of the problems that those vehicles are having. And so the number one thing that I'm watching for, trying to understand, is as we get feedback from China, A, how is Tesla's numbers doing there? And number two, why are those numbers either high or low? And number three, how does the future look in terms of how Tesla's numbers look? The answer that we seem to have gotten from the Chinese consumers over the last several years is we know what the premium brands are, and we're inclined to focus on those premium brands, despite the fact that we can get nice discounts on domestic manufacturers of a lot of different types of vehicles, especially electric vehicles. Now, I've watched maybe 100 videos from Sarpenza about what's going on in China with EVs. Most of them have been fairly negative, and a lot of the news about the problems with these vehicles have been suppressed. In about 40 videos that I've seen that he's presented on different vehicles, there's a constant theme that seems to be going on where in their EVs, most if not all of them do not deploy airbags when they have accidents. I don't know if that's going to be the case if we have issues in Europe or Australia, for example. But the general idea is that the Chinese domestic consumers affirm that Tesla builds a better car that performs better. And informed Chinese buyers will focus on particularly Tesla as a brand, but all the Mercedes and Audi and all those companies still draw huge sales because of the reliability of production that goes on when it comes to quality. So I have been sort of laser focused on this because if you think about it, let's say if we took away all of the sales in Shanghai, it would show declining revenue and profit for Tesla, and obviously that would have negatively impacted the stock. And that has not been the case. So the lurking question is, well, wait a second, if they're offering a 30% discount in everywhere where they compete with Tesla, why are informed buyers in China saying, I'm not interested? And as you see some of this, the videos that you'll see on Sarpenza, where these vehicles are blowing up or other technology issues that do not work properly, I think you'll understand why the consumers are on a caveat emptor plan where they're buyer beware. And if we can get a foreign alternative that has more reliability and quality, we'll go that route. So overall, obviously, we're going to do another show as we head into this, the new vehicle that's coming out from Tesla, and the revenue potential for that, I think, is going to positively impact the stock for a nice boost in Tesla's both revenue and profit as we go forward. So the other note that I found in research that I think is kind of cool relative to Tesla is what's going on with tax credits. So as you know, both in the United States and more actually in Europe, the manufacturers, by delaying the transition to electric vehicles or the growth in the number of production units, are now in trouble with their respective governments. Why? Because if they don't sell a certain number of vehicles, they have to, in essence, give a fee to those that are selling electric vehicles like Tesla. So as we move forward, given that we're seeing a little bit of a surrender from the major European makes to Tesla, and then we're seeing a bit of a surrender in the United States by Ford and GM, we're ending up in a position where Tesla will end up with revenue growing, but also we're going to see profit growing more than revenue because those fees that they have to pay for not selling enough EVs are going to keep going to Tesla while those companies make money polluting with their ICE vehicles. I thought this would be over by now, especially given what Bob Lutz has suggested would be the case over time, but it's not happening. Their solutions in the EV space are not working well. We've covered this a number of times, but I have to say I'm still amazed. ChargePoint is the largest sort of charging competitor to Tesla, and they're claiming 90%-ish reliability, but they're showing up with sort of not far fewer super or fast charging facilities than Tesla, but they're also showing Tesla is still in the 95% plus uptime zone. And in terms of plugs that don't work properly or software that doesn't allow those entities to charge vehicles properly, they're introducing a lot of issues for consumers that are ready to make the switch to electric vehicles. And as a result, the consumers are saying, oh, you do have charging facilities that are not Tesla out there. Oh, reliability rates are in the 60% range that's experienced by users. So, yes, I can charge my stuff at home, but I want the flexibility, for whatever reason, of being able to charge when I'm not at home, especially if you're in a high density city area where the charging abilities is not as easy as if I owned a home that was freestanding in the suburbs, or for example, I wasn't traveling. So where things seem to be going is the consumers are saying, I'm comfortable with Tesla's ability to make sure that I don't run out of juice and that I can do whatever I want to do. And so as a result, it just looks like Tesla is going to keep taking market share, surprisingly, when, as Bob Lutz once said, Tesla offers no advantages. Well, Bob, I'm sorry, but charging is a real advantage, and it's irrelevant to the manufacturers if they're charging facilities for consumers that are ubiquitous as well as reliable in operation. And so as a result, Tesla continues to gain market share when they should have lost a lot of market share if the competition in the form of large OEMs was better organized. So we will see how this all plays out. I leave you with one last question. And the question is, when it comes to electric vehicles, what's the competitive advantage of the larger OEM brands, i.e., General Motors or Mercedes or BMW? What's their electric competitive advantage? Well, you could argue it's a negative competitive advantage because they don't have electricity optimized for their vehicles because Tesla is sort of the dominant player in the space. They're having to rely on partners to provide electricity who've shown themselves to sort of be a little bit disorganized and not ready for prime time. So the consumers are saying, hey, once you guys get it together, I'll be back in the market in 2 or 3 years to make the transition, but it's not going to happen now. So we look forward to your comments on this. This is Greg for Teslafaninsight. Our final component today is our health tips as usual. I'd have to say I'm really kind of focused on the whole kidney issue that we've been talking about. Several of our doctor folks or friends of the show have said that they view that the whole issue of whether or not you're helping to manage your kidneys better is a legitimate thing to consider in your eating process. And the recommendation is that you at least 3 days a week do not eat any meat for those days, giving your kidneys a break, and see if you feel any healthier after trying out this process. We look forward to any and all comments regarding. Once again, thanks for joining us. We look forward to some good outcomes on the 10th on what's going on new for Tesla and its potential impact on the stock. And we look forward to any suggestions you might have on show topics we should consider. Thanks once again. Have a great day, and bye for now.